Hello everyone and welcome back to the Velocity channel, where this is your bridge to financial freedom. Listen, we're going to be tackling the question, how can I stay afloat when all of my cards are maxed out? How can I still pay them down? I don't know how to do that. Could you please help? We are going to help right now, and you can actually implement this right after this video. But before we get into how to do that with no cash flow, all right, please like, share, and subscribe, or like, share, and subscribe so that you can know the power and everyone else can know the power of Velocity Banking. Okay, so here's what we're gonna do. We're gonna go ahead and just be honest with you. Sometimes we are in situations where there is no cash flow, all right? As in this person's situation, all right? Have you ever found yourself $6,000 is coming in, but $6,000 is going out, leaving you with zero cash flow? Oh, by the way, you got a couple of cards, maybe you have 3 or 5 credit cards that are all maxed out, and you're thinking there's no way I'm gonna have to ask for a consolidation loan because I don't know how to pay these cards off. Let's go ahead and take this first example, and then once you know how to do this, it'll actually trickle on to any other credit card that you have, all right? $22,000, and let's just say it's $800 each and every month. CJ, what happened to the interest rate? Well, listen, I'm not going to confuse you with the interest rates. Just know this about the interest rates, that they can bite you. Going towards this example right here of $10,000 at 18%, that can take you 29 years if you just pay the minimum payment. All right, let's go ahead and make sure we know how to calculate the interest. 18%, you're going to divide that by 12 because there's 12 months in a year. You're going to multiply that by the balance. In this scenario, it's $10,000, and that's going to equal $150 a month just in interest. Now, there are credit card companies that say, hey, they take this example right here and they say, listen, you only have to pay back $155 each month. Well, if you've got $10,000 balance at 18% and you only have to pay the minimum monthly payment of $155 a month, how much of that monthly payment is going to the principal? Do credit cards do that? Do lenders do that? They absolutely do, which is why some people take 29 years to pay off what should have taken them months, okay? This is about 350 months, okay? We want you out of that because the bottom line is credit cards make money off of us like this, all right? Interest rate, minimum monthly payment, and statement date versus payment date. And we're actually going to take advantage of time so that we can take advantage of this leverage we're about to implement right now. Let's go back to the balance here of $22,000, $800 each and every month. So since we know we are not going to pay the way the bank wants us to pay, that is minimum monthly payments, what are we going to do? Well, we're going to go ahead and divide our income, okay? This is what we're going to do. We're going to divide it like this. All right, we've got $3,200 in payments that cannot be paid with a credit card. Again, $3,200 of this $6,000 cannot be paid with a credit card. What does that mean? That means we got rent, maybe we got other credit cards, and maybe we got utilities. They refuse to accept credit cards. We're going to go ahead and include that in the scenario, okay? There's $3,200 you're not going to be able to put on the credit card. But there's $2,800 that we can put on the credit card, meaning groceries, gas, etc., etc. Phone bill, you can put that on the credit card as well. So I'm going to have to ask you to do something. That $2,800, I want you to put all $2,800 towards this principal. Now, remember, we're dealing with a line of credit here. Credit cards are classified as a line of credit. And I want you to notice what happens when you put the $2,800 towards the $22,000. Immediately, the credit card companies see that as a payment when we see it as a transfer. Now, keep in mind, there's going to be a way that you're paying this credit card, and that is you're going to pay a few days before the statement date. Okay? You're going to pay a few days before the statement date. What that does is it helps your credit score to go up, okay? And it also makes sure that the credit bureaus don't get all of your expenses, because you're hiding your expenses inside of the credit card with that $2,800. Now, immediately, and a lot of you already know this, immediately what's going to happen when you pay that $2,800? What do we have to not worry about anymore? We don't have to worry about the $800 each and every month. And you remember on the ways that the credit card company makes money off of us is they make money off of us by that minimum monthly payment. We are not paying the minimum monthly payment anymore because we've got $2,800 being paid right before our statement date. So what that means is that with the $2,800, right, we have freed up cash flow. But what is that cash flow doing? We have control of it. And that's what's paying down each and every month that credit card each month. Let's go ahead and take a look at it, shall we? Month one, you found out, why goodness, I can keep $800 in there. All right, let's do it. Month two, we have $20,400. That's the balance now. And remember, we're paying it down just like this every month. Month three, $19,600. Month four, $18,800. Month five, $18,000. Month seven, $16,400. Now, keep in mind, you've got to keep this up. All right. I know it's going to be quite difficult at first. And I know you're kind of nervous about putting all the $2,800 that can be paid by the credit card in there. However, remember what you are doing and how much you can control of that $2,800. You can control all of it. Why? Because you're making the payment before the statement date. Okay, a couple or a few days, 2 or 3 days before that statement date. All right. And remember, you have to take advantage of balance and time. And that is exactly what we are doing. Okay, that's why we avoid the $800, each month. And we're just going to go ahead and take control of all $2,800 so that it can stay in our control, so that we can spend for the groceries, the gas. And my recommendation to you, man, free up as much as you can from this $2,800. Okay, now let's go ahead and look at what happens when you're in month seven. Month seven, you are at $5,600 available credit. Now, if there's an emergency, right? Let's say, heaven forbid, you got a tire flat on the side of the road. This is the difference between catastrophe and inconvenience, right? Yeah, it's an inconvenience if you've got this capital available, which you do now at the end of that 57 or that 7th month. Now, the $5,600 available, if you're a business owner, you already probably know what to do with that. If you're into real estate investing, now what we can do is focus on building our cash flow. All right. That is, if you don't have any other debts. Now, if you do have other debts, I do want to encourage you that after the 25th month, you're actually going to be free of the $22,000 if you pay this faithfully. Now, remember, you are in control, and that's what it's all about, right? Not necessarily about ownership, right? But it's about control. What can you control? And you control the $2,800, all right? You're controlling not paying the $800 each month, but that being sitting down right there in your credit card account and paying that each and every month. All right. 25th month, you're going to be free of that. That's going to free you up totally. And then you'll be able to pay down even more debts. Does that make sense? So if you have a $10,000 that's maxed out, right? You've been making the minimum monthly payments all this time. Now you can focus on that one. You got another card, you'll be able to focus on that one on down the line. Does that make sense? What we need to do is make sure that we are utilizing what we have. And what we have is what? We've got time and we've got cash flow. Avoiding the minimum monthly payments, right? By making sure that we are paying the full gamut of that $2,800, the expenses that we can pay with the credit card. We want to make sure that we are. Listen, I got to give a shout out to Jay. And I used his numbers because he did such a great job in elucidating it. I said, man, I've got to share that with my people. I hope I did them justice. He's just an amazing man, an amazing YouTube creator. We appreciate him actually taking the time and going through the numbers. We had to share that with you just in case you didn't know. Again, if you have zero cash flow, there is hope. You just got to know when to pay the credit card. All right. So let's just go ahead and do an overview. The credit card companies will be making money off of you by interest rates. Okay, they're taking advantage of the minimum monthly payment because they know most people will do the minimum monthly payment. And then they're taking advantage of the statement versus the payment date. They want you to pay on that payment date, but you're going to pay a few days before the statement date. All right. So you can take control of the $2,800. Now, I know the question is going to come up. What about the interest? What about the interest? Well, just so you know, $500 in interest they're going to want from you. Okay, on this. And that's why I say, don't even worry. Don't be concerned about the interest. Be concerned about time and balance. We're going to take advantage of that, just like the banks take advantage of that. When it comes to getting your money, we're going to take advantage of that so that we can pay off all of our debts as fast as possible. I'm going to go ahead and get out of the way. If you guys want to make sure you take a screenshot of all of that, I want you to know that paying it this way will make sure you're out of it in 25 months instead of the dreaded mortgage, right? 350 months to pay that off, 29 years to pay off $10,000, much more than that to pay off $22,000. I don't want you guys there. I don't want you in that spot. I want you out as free as possible because really it's all about replacing that earned income with passive income, and those videos are coming up real soon. I've been talking to somebody. They're actually doing things in the work. We're going to share with you what you can do on that passive income aspect. Okay, we're going to share that with you. God bless each and every one of you, and you take care. We'll see you in another video.